All right, so dollar index, we have daily chart on the left-hand side, and we have this close, I'm sorry, this open on this down close candle. That's a bullish order block. That blue line right there, it's this candlestick's opening price, okay? So the dollar index traded lower into this old buy side and balance sell side inefficiency that's shaded in blue and hit that old order block level there. So right in here, as it hits that, there's most likely going to be some sensitivity off of that. So we'd have to then resume probably up into the high of the old buy side and balance sell side inefficiency. And also it's the first return inside that. So that's usually pretty significant. It's also on a daily chart. So we can get a little bit of a pop there intraday, sending euro and cable lower. All right, so here at midnight, we have a fair value gap here that initially acts as a breakaway gap. And then we have continuation lower, fair value gap there. Ignore the wicks, okay? Down, SIBI trades up into that as well, breaks lower into this low. We rally away from that, come all the way back up to pounds encroachment of this daily premium wick and fair value gap. And guess what it goes into a inversion fair value gap there. This low does not take out that low. We come all the way back up to the inversion fair value gap. Small little errant wick there. It's normal. It's permissible. Notice the bodies are staying inside the inversion fair value gap. Okay. Notice it's not classic support and resistance of this old high. The bodies are being held inside of my PD array. This up close candle casted forward, and you'll see that it acts as an inversion fair value gap. Then it drops down, takes out the relative equal lows here and into that September 22nd daily open on that candlestick right there. So it'll be interesting to see what we do on the Asia and London session tonight on dollar and euro dollar and pound dollar. So it has the stage to do something if the dollar wants to resume or consolidate inside this old wick. All right, so here's euro daily chart over here, old inefficiency, casting that forward. And we have this daily candlestick discount wick is being graded here. Lower quadrant, that's this level up here. Okay, so we hit it once here in London. We dropped all the way down, traded into a bullish fair value gap first, running it up in there. Hit the low of that inefficiency over here. Sold off, hit the order block, or fair value gap rather, up again. Consequent encroachment of the premium wick, hits it, trades lower, consolidates in the initial bullish fair value gap, but now becomes an inversion fair value gap. It breaks lower down into the inefficiency here, goes below it, comes right back in, treats it as an inversion fair value gap, trades down into an old bullish fair value gap, now becomes an inversion fair value gap. Trades higher, and then it starts to reaccumulate at that old order block. So it's a bullish reclaimed fair value gap. Same thing here, back up into the low of this discount wick. That's this level here. Comes all the way back down to the bullish fair value gap. So it's a reclaimed bullish fair value gap once more. Rallies, consolidates inside the old fair value gap. So it's a reclaimed bullish fair value gap once more. Then they send it once more higher and relative equal highs here, but trading into that lower quadrant of that discount wick there. British pound, we're stuck in between two wicks. Okay, so we have an old wick. You'll look at the older and this one up here. So we've basically been trapped between that, and the only thing that was noteworthy is the inversion fair value gap here after taking sell side, relative equal lows, relative equal highs. So that liquidity was taken first, came up, left these buy stops there. You see that? Dove one more time lower. So that means this right here is absolutely going to be a murder, a PD, right? So it's casted forward. It's an inversion fair value gap. and hits it once more and then comes right back up into the upper quadrant of this one right here. And that's there. All right, left-hand side daily chart. Okay, and you can see we're part of a longer uptrend. So we have a discount array in here in form of this wick and this consequent encroachment of this premium wick right there. And we have the lower quadrant of this premium wick. So that's where your levels are going to come from. It's shown over here, the horizontal line. This line here is this consequent encroachment of that premium wick. All right, so we have fair value gap. It dropped lower, went into that old consequent encroachment of that premium wick on this daily candle. Traded through it, accumulated around it, bullish fair value gap here, rallies, and then we have the first introduction to my first mention of it in public. I've never taught it before. I've never given it to anybody. This is my ICT suspension block. Okay, and you'll see it with this wick laying over top of it. So you would never look at that as a fair value gap, not by the definitions of it initially given. This is a bullish fair value gap, but this is not a bullish fair value gap in its classic sense. And if you look real close, there is a volume imbalance at the top and a volume imbalance at the bottom, even though this wick goes higher. Whenever you have one single candle that has a volume imbalance to the low and a volume imbalance to the high, that is going to act just like a fair value gap. And it does not matter if there's wicks that had already crossed over that to the left of it. You simply don't even worry about it. It's being suspended between two volume imbalances. That's why I named it suspension block. But we trade down into this, trade up into this suspension block too. Now, I only changed the colors here just to show that they're both suspension blocks, but this one's the larger one, and we're going to push this one forward in time. So the creation of this is, again, a volume imbalance at the top, a volume imbalance at the bottom, and it does not matter if there's a wick to the left. So if it looks like it's been redelivered or it's back and forth in the same area, it's still inefficient. And it's being highlighted algorithmically because there's a volume imbalance to the lower and the higher end of it. The bottom line is, here we go. We have the bullish suspension block, and it trades down to it here, and then consequent encroachment over here. And then one more time, it dives down into it here, consequent encroachment, upper quadrant of it, just almost to consequent encroachment, but notice the body respecting it here. So the market breaks down, comes back up one more time into another suspension block. See this? Lower volume imbalance, upper volume imbalance. But because we had a reversal, when we come back down in, it's going to act as what? Just like an inversion fair value gap. It changes its characteristic. So it trades up into consequent encroachment, breaks lower fair value gap, digs past the first suspension block, and down into the second one. See that? And it rallies up, supports at the low of this suspension block there. So there's discount sensitivity, rallies up, discount sensitivity at the high of it, rallies, volume imbalance, trades one more time up into the suspension block here. And because it's changed its character to that of being a premium array, the body's respecting it here. Look at the bodies. I mean, look at that. That's technical science. And it rallies up. Look at the body stopping right there. That's technical science. But it breaks lower, comes back up, consequent encroachment, trades down to the volume imbalance, and then sends it higher back. These are just the upper and lower quadrants, respectively, into this suspension block. All right, so moving forward, that's suspension block, and the lower green one, I have that here so you can see it in reference. Price rallies away from that. Inversion fair value gap was a SIBI. Now it's a bullish inversion fair value gap. Consequent encroachment sends it higher. Finds support at the upper quadrant of the suspension block over here. Completely random. Rallies up, consolidates around the volume imbalance that I told you to look for in the 1 minute chart to the left. Rallies up, peters out, comes down, and then fizzles out, and then it creates the relative equal highs I mentioned at the opening. So the market breaks down, and then we go into this really ugly back and forth over top the first percent of fair value gap, which I'll annotate in a minute, but just really back and forth, had no support or affinity for the first percent of fair value gap. It just kept sweeping back and forth, and that's manipulation. They go up into the upper quadrant here of the suspension block, dive down into the bullish fair value gap in here, and we're using the lower volume of bounds, and the candlestick's low here, hits it beautifully with the bodies, and then it shows the rally away from that, and then we're going to move forward in time again. Here's first presented fair value gap. You can see all the movement back and forth, back and forth, back and forth, back and forth. And it wasn't until we got around in here where price left the lower half here. We've done a lot of damage down here on the downside, and aiming for this area here. We finally ripped for it, breakaway gap, trades through it here, and then I mentioned that 24,857 buy side remained, so they came up and hit that. Body stopped right there beautifully, and sells off once more back into first presented fair value gap. Just again, no real respect of it at all, just complete manipulation. When the first presented fair value gap does not have any kind of sway over the marketplace, and you don't see it being respected at all, no support, no resistance to it, no consolidations inside of it with just the bodies, it's indicating that we're in troubled waters. That's not usually what you see. So it's a decoupling in the marketplace. So that makes it more likely that we're going to have high resistance liquidity run conditions, which is exactly what we had here today. So the rally off of the consequent correction over here, hit that, and then we start to have a little bit of respect over here, rallies back up, goes into a fair value gap that's bearish here, and then sells off, trades back down towards the halfway point of that level there. We dip down to 24,722 and something, and we have that's an inversion fair value gap. Okay, hits it here, fair value gap there as well, rallies, a little fair value gap at the consequent encouragement of the old premium wick right there. See that? And then it rallies up. Again, no coming back down in and touching the first the fair value gap. It just kept on rallying. But all in all, it was very, very manipulated today. But just all in all, this if you got hurt today, if you had difficulty, it's not a knock against you, because this was a very hard read. It was a very difficult read. Not impossible to trade, obviously, but very, very difficult to read, and not high probability, not clean price action, not obvious PD arrays and obvious draw on liquidity and straight runs. This is high resistance liquidity run conditions where it's going to frustrate you. It's going to frustrate you. So one of the advantages of learning under me is identifying the characteristics that lead up to these events, because the best skill set you can have as a trader is knowing when not to risk money.